Hello and welcome. My name is Jonathan Stav, and here at Sectors Made Simple, we've created over 300 hours of educational content and unique investment tools to give you the knowledge and resources you need to invest simpler. Today, I want to introduce you to technical analysis and talk about why technical analysis is at the core of many successful trading strategies. This is a skill set that can benefit both new and seasoned investors alike. And while we don't have enough time to go into many specific strategies using technical analysis, today we will introduce you to the basics of what technical analysis is, as well as talk about some different ways that you can continue your journey into technical analysis after this video. With all that said, let's take a look at what we'll cover in today's video. In today's video, we'll cover what technical analysis is, why technical analysis is so important, what technical indicators are, some examples of different types of technical indicators, and finally, we'll talk a little bit more about an upcoming analysis strategy series we're working on here at Sectors Made Simple. Let's start off by talking about what technical analysis is. Technical analysis is a way of evaluating securities, like stocks. But unlike fundamental analysis that looks at a company's profitability and the health of that company, industry, sector, or even the entire economy, technical analysis instead focuses entirely on the stock's price and trade volume. Our goal is to use this price and volume data to create and find patterns to find periods where we can buy or sell a security. Because of this, most often, technical analysis is used in addition to stock charts, using the chart's data to find trend lines, support and resistance barriers, or average prices over time. If some of those terms were new to you, don't worry, we'll cover them later on in this video. But for right now, let's start talking a little bit more about why technical analysis is so important for us as investors. In last week's video, we talked about the basics of fundamental analysis. In that video, we discussed what fundamental analysis is and why it's so important for us as investors. If you haven't seen that video, I highly recommend taking a look at it. You'll find a link up in the top right of this video or down in the description. But we also talked about why fundamental analysis is not perfect. While it is very good at helping us to figure out the value of a company and is excellent for more long-term strategies such as a buy and hold, it's not great in terms of helping us to find exact entry and exit points for a security. That's where we can use technical analysis. Technical analysis, in contrast, focuses entirely on the stock's price and its volume, finding periods of rising and falling trends to identify where we can enter and exit to turn a profit. While many different technical analysis strategies are different, many of them share a similarity in that they are fractal, a great term for explaining a strategy that can be used with any time period. For example, if you want a strategy that lets you look at day-over-day prices so that you can find entry and exit points a couple times a week, technical analysis can do that. But some of these same strategies can be used where instead of using 1 day-long bars, we use 15-minute bars. And suddenly a strategy that was great for more passive, laid-back investing is now an active day trader strategy that allows us to capitalize on uptrends and downtrends in the middle of the trading day. Whether you're a day trader, swing trader, or just trying to get more active in the market, technical analysis has lots to offer us in terms of giving us options and flexibility to trade different securities at different points in time. There is one final benefit of technical analysis that I feel like is worth mentioning. Unlike fundamental analysis that we're limited to looking at stocks and companies that we have significant data for, technical analysis is just using price and volume, which are two attributes that we have for many different types of securities as well. This opens up many opportunities for us to look at investing into options, futures, commodities, or even cryptocurrencies and Forex. Now that we've talked a little bit more about what technical analysis is and why it's so important, let's talk about the main way that investors use technical analysis: indicators. Technical indicators are a style of creating information that use either mathematical equations, formulas, or a set of rules to turn that price and volume data into a piece of information that we can use as part of our decision-making process. While there are some types of indicators that are not mathematical, many of them still do follow a set of rules. For example, support and resistance levels in point and figure. If you're unfamiliar with point and figure, you can learn more about it in our point and figure basics videos. But for right now, we'll talk a little bit more generally. Point and figure, instead of following price over time, follows price trends, where each column, instead of being based on time, is based on a singular uptrend or downtrend in the market. We can use this price data to create different levels of support and resistance, where we find where a previous uptrend ended and reversed into a downtrend, or where previous downtrend reversed and reversed into an uptrend. By finding these different points, we create support and resistance levels, where if we have a price rise above a previous high, that now indicates that something has changed and we're now in a new, uncharted price territory. While this is a more out there example, other types of technical indicators can be as simple as take a bunch of prices over time, find the average of the prices over time, and we're done. When it comes to different types of technical indicators, we can group these indicators into two main categories: overlays and oscillators. Let's start off with overlays and talk a little bit more about that category. Overlays are indicators that use the same scale as the price of that security. Because of this, we can put that piece of information on top of the current stock chart, allowing us to see the stock chart and that piece of information at the same time. That's where the name overlay comes from. That indicator is literally overlaid on top of the price chart. These values are typically used to compare the stock or security's current price against these overlays to see if the price is currently above or below these different indicator lines. Remember, we're also not limited to just one technical indicator at a time. Many trading strategies use multiple different types of indicators and overlays to compare and contrast how those indicators stack up and where the current price falls within all of those different lines. Next, we have oscillators. Unlike overlays that use the same scale as the security's price chart, oscillators use different scales. Most commonly, these scales will be a percentage from 0 to 100, or will be a positive or negative value centered around 0. Either way, these charts have a different scale, and as a result, need to have their own chart. These charts are typically placed above or below the security's current price chart, allowing us to still see information over the same period of time, but with the information a little bit more stacked on top of each other. Before we get into some examples of both overlays and oscillators, I'd like to remind you that if you're enjoying this video, we really would appreciate a like on this video and a subscription to our channel. These little things by you are completely free and are a great way to invest in your financial education. Now, let's talk about some specific examples of overlays and oscillators. Let's now talk about some specific types of technical indicators and how these indicators can be used as part of an investment strategy. Starting with overlays. With overlays, we're going to go back to our point and figure support and resistance example. With this, when we create a support and resistance barrier, point and figure typically uses these barriers as buy and sell signals. A buy signal is given when the current column of X's goes above the previous column, or a current price trend that is positive goes above where a previous price trend that was positive stopped and reversed negative. Equally, we can look at the same sorts of support barriers as our sell signals, where when a current negative trend represented by a column of O's goes below the previous low from a column of O's, that would be a point and figure sell signal. These very, very simple examples of technical indicators are the basics of much of the technical analysis strategies within point and figure. Beyond point and figure, though, there are many different other types of overlays, such as moving averages, Bollinger Bands, pivot points, and more. Next, let's give an example of a type of oscillator. One of the more common types of oscillators that you might see is the relative strength index, or RSI. RSI tries to be a momentum indicator of a security's current price. By tracking the average gain and average loss over different periods of time, we can get an understanding of the current trend and the strength of that trend. This value is plotted on a scale from 0 to 100%. Values that are below 30% indicate that the security is oversold, whereas values above 70% indicate that the security is overbought. These levels of overbought and oversold can be used as confirmations or contradictions to other types of overlays and allow us to confirm or deny any findings that we find through other methods. RSI is only one example of many different types of oscillators that you might encounter. Other common types of oscillators include moving average convergence divergence, or MACD, and stochastics. While technical analysis is something that investors can learn how to utilize on their own, we also want to be here to offer our help as well. If you want a guided tour through the world of both technical and fundamental analysis with specific and detailed trading strategies that leverage much of the information that you learned today, check out our upcoming series, The Analysis Academy, starting in May. This 6-week, 12-lesson course will feature live instruction, live Q&A, and live feedback, and allow you to get a detailed look at both fundamental and technical analysis. In addition to giving you trading strategies that you can immediately put into use, we will provide you with scripts for the common trading platform TradingView. With these scripts, you can tweak, customize, and backtest strategies over your level of comfort for both risk and reward, allowing you to see real results of how well that strategy would have done in the past. For more information on this series and to register today, please check out our website, sectorsmadesimple.com/analysisacademy. You can find the link to that up in the top right of this video or down in the description below. With all of that said, let's now take a look at what we've learned in today's video. We covered that technical analysis is a way of evaluating securities by using their price and volume data to inform decisions. There are two main categories of technical indicators that we use: overlays and oscillators. Overlays use the same price scale as the securities chart and can be plotted on top of that chart. Oscillators use different types of scaling, such as 0 to 100%, or positive and negative values centered around 0, and because of that different scale, are plotted above or below the price chart. Finally, these indicators can be used on their own or in conjunction to another technical indicator or the price of the security to create strategies that are great for both short-term investing, long-term investing, and everything in between. We hope you enjoyed this tour of the basics of technical analysis. If you enjoyed this video and would like to see more videos like it, check out our YouTube channel, sectorsmadesimple.com, to see the over 100 hours of previous recorded webinars we offer, as well as we publish new videos here every single Friday. Or, if you want more of a guided tour through the information that we offer, you can create a free account on our website, sectorsmadesimple.com, and browse all of our recorded webinar content on our Learn site, where you can browse by category, language, and more, allowing you to find the information to help you invest simpler. But that's all the time we have for today. Thank you so much, and we hope to see you back here at Sectors Made Simple very, very soon.